weekers. This is based off what we talked about yesterday. This is a
12
live
weekers.
example of that trend continuation opportunity that I forgot who asked about it, that we went over yesterday. All right. So my initial zone starts from here, right? This is my kill zone. I know it's a pretty big kill zone.
Okay, so the idea here is that trend continuation is how you're going to make money. What I don't understand is, at what point do I get in these trends? Like, it's going down, right? The trend's down. So where was the places to get in? And this is a 1 hour chart. I can't tell how many pips this thing's trading. I don't even know what instrument it is, but it wouldn't matter, because at this point, when I see the market go down for 1, 2, 3, 4, 5, 6, 7 hours down, I got buy stops above. Now, what is this? The pip range of this last 1 hour would determine my stop. If I was going to just bracket this, and in a previous video, he's talking about making 5% a month. Well, that's terrible. And he's claiming, and I guess I must be a rock star in trading, because if I'm making 5% a month, I'm ready to commit suicide. I can't even imagine. Like, who's not? Okay, 5% a day maybe, but I mean, that's taking the most. He was talking about somebody trading a mini, where he's risking $1 a pip. Now, if you put a micro in there and you trade 7, he's saying you need to have $500. He said $1,000 is not enough to trade with. On a mini account, it is if you're scalping. If you're sitting there and you got a 10 pip stop, you're in the 5 minute, and you're taking little chunks out of the market. But I think the big issue here is that when you look at this 1 hour chart, which consists of about if somebody put a gun to your head every hour and said, okay, trade. What's your trade right now? Some of the problems on this chart, as far as gun to your head trading, is this big down. What do? You put a sell stop here? Sure, with a tight stop, but you couldn't put a protection, like in robot rules. You couldn't put a protection up here, because you're risking, you got to make, oh geez, let me get my trusty new pen here. This is the Epic pen from the Internet Free. But say a robot was going to get in, and he sees, oh, we're in a downtrend. Put a sell stop in. Put your buy stop for protection. And you've got to, a break-even trade is going to take you to here. And that's why 50% is pretty much all you need to know. I'm a big fan of Gann, because you can break out a fib tool and you can get all fancy, or you can put a cloud way out here. But if you have a cloud out here, don't you want that cloud to have order banks, so when the market drops in, you get filled on a limit? As it's coming back, comes down, you're willing to buy another one, and you have a buy stop here. So you have 3 orders you're getting in. As this market is it going to go down forever on a 1 hour chart? Did it go down forever here on the 1 hour chart? No. And when you got to this doji, if you were to robotically, mechanically get in on a buy stop, they trapped you and then they raped you, right? They took it down even lower. So when the market's quiet, you have to take that risk of putting in non-directional trades. Now, this may not be enough pips for your to fill your cup of tea, and you're not going to make maybe a living there. But if you're trading on a tight currency pair like the euro, and you're willing to drill down to a 15-minute double bottom and just buy the damn thing for a target of here and just get the hell out, I think that's golden. Here, when the news comes out, which maybe this was, and why this guy doesn't trade the news, I'll never know. Because if you had a sell stop and a buy stop here, sell limits here, and if you had a sell stop here and one of his high risk trades, which is this guy's risking a lot apparently, per pip. And some people aren't willing to trade a high probability small move. They want the big juicy move. Now this is a counter trend move and a supposed downtrend. This is a pile of money. In fact, if you had limits sitting here for some reason, you could look left or some nonsense. But in the end, it's really about what's going on right now. Is this an amazing doji hammer? Yes. But unless you bought it close, it's already moved. In other words, you're chasing it up into a previous structure. So yeah, you have this thing here. Now what he's doing in this video, and I haven't gotten through, I'm just stopping it right now because I never can take it. When I'm watching somebody that just won't take you through this thing, like he'll break out these things that are just so psychologically detrimental. You're projecting. Once you get out the Gartley book and the thing of patterns, it has nothing to do. That's not trading. That is pattern, like pattern, fantasy pattern. I would say, because it's like, oh, if it goes up here now, okay, let me just go continue with it. People think I love this guy to death. The greatest motivational speaker for trading, but when you watch him trade, you have to ask yourself, obviously his money management skills must be top notch, because his entry, he's going to try to sell here, but why wouldn't you ride this north into that? And this is why trend trading and saying, if you don't know the trend, you're in trouble. But why would you pass up a high probability reversal pattern? But see, he's got a checklist. The guy that trained him is in the military. And I'm going to tell you, military intelligence, and I think actually that's why these guys are smart at, they want to teach people, they want to coach people. But if you walk away from these people with these Gartley patterns, and I could actually come up with a system called I call it the anvil pattern. It looks like an anvil. I mean, you can make anything you want here. It's endless, right? I'm going to go back to his thesis here. Oh, didn't hit the button. I need painting devices.
Yeah, what am I supposed to do with this? We're going to narrow it down later, don't worry. But this is my kill zone. My kill zone is about 61 pips. Now let me just make sure we're not on cipher pattern. We've got about 9 minutes for room. Look at that. I've got a 382 Fibonacci retracement. I've got a 786 Fibonacci retracement lining up at the same level. What do we like to call that, fellas?
Did he just say 62 pips? There's some people, with a 20 pip stop, 62 pips, what is that risk to reward ratio? Aren't these trades in here? Okay, is it just me? This is one way of trading. What he's doing is one way of trading. But if you go with what the market's doing, and you're able to be flexible enough to see it from the seller's position and the buyer's position simultaneously, which may not be easy, if you have a bias if you're a fundamentalist, you're saying, look, I'm right, it's in a downtrend. But how are you managing this where, if you sold on a breakout here and the market comes here and you did not get out and you move your stop to break even, Now, what if you sold here and you took something off the table in the first breakup? You could have even got in on a retest smack back there. But as that's dropping, you got buy stops on top, or you're thinking, well, how long is this thing going to go? And another thing is that just the sheer fact that if you went to the 4 hour, this may look like a clean down of, say, 12 hours or 16 hours. It may be a perfectly clean ride down here and here. It's complete V, complete all the way back to the starting gate. And here, this wick here being the window of the wick to the body, you could have either had sell limits there, or you could have said, I'll wait till the market quiets down and I got this one V fractal and I put my sell stop there, I put my buy protection there, and I just let it happen. But as that's happening, it's not like this thing's going to go to whatever, some ungodly target that you've kind of got in your mind that you got to figure the last time it did it, it went like this, right? This is kind of like the rate of change on a run. And you must have had, if you got in here, you must have taken something off on that first, because that could have been a bear trap, and then we could just come back up. So there's scenarios. There's only two scenarios. Well, three if you consider sideways, up or down. So how do we get there, and who do we trap, and then who do we rape, and who do we leave in the alley? All the retail traders that, and when you're going to break out these advanced patterns, it's more like advanced flexibility is what you need, because if you don't have I'll say, if you have a bearish Gartley, you should have a bullish Gartley on your screen to give you the other side of the argument. The amount of let, I mean, you're looking at this thing in a bias. I just think it's the worst thing is to have a bias in these markets, because you're just going to be tortured by the up and down action.
And ladies, Fibonacci confluence. Yep.
Okay, I don't get the Fibonacci.
And I can start working through the process. I can say, if price action, and it's still a long process, but if price action comes up to this level, right, then I will be looking to get short. If I get short, stops need to be, let's say, here, above previous structure. Where are we looking for targets at, guys? Are we looking for a full extension, retest of structure? And again, we're really early, so we don't even know that this thing is going to turn around yet. Previous structure low. Right there. What do you guys think? Is this a good, is this a risk reward that would meet your requirements? Let me just scroll down real quick. That's gonna kill it if we don't. I thought we had a bat. Come on, baby. Come on, baby. We're going to just miss it.
Okay.
Oh, man. Check your data.
You kill me.
2 pips off. Check your data. I was going to say.
That's the part I don't get. Like, what is all that? Now, where was the trade here? We were watching this collapse for 7 hours. And I have not seen this video. So what did I say? We're waiting for this thing to get filled on the buy stop. Now, is that a lot of money? It's a high probability trade, and the probabilities that another high probability trade, typically in these markets, if you're willing to make 20 pips, and I think this is a 60 pip range, he says kill zone, whatever the hell that means. This must be some kind of like Navy SEAL speak. But this range here, if that's 60 pips, that means this is 60. That's 120 pips. Whatever his fib levels are here, just use that as this is 20 pips here. So would it be a good idea to have a buy stop trailing here, and as soon as that's filled, okay, you have a trailing sell, and maybe you scooch it up, and maybe you do bring it to break even, and oh, they almost stop you out, but hey, you know what, you climaxes here, and maybe your target was just to make a few pips. So his speculation was, and you notice he over speculated it was going to come up to here, and then it's going to come down here, but these markets aren't going to go into these kind of, in other words, why would you ignore 8 hours of a different kind of setup if you can't see this setup? If you can't see support and resistance, this is why you don't want to put fibs up there, because it's very distracting to what the market's doing. Like, this whole Fibonacci thing is based on a scenario of him getting in on a certain kickback. But that's not what's going on. I can't zoom in on his chart, but if you look at this lower highs, and you come down, and mechanically, this is classic bear trap material where we've been building up here. We've had a hole filling. They come down and grab, and then they rallied up, and then they retest. Having buy limits here with a stop here is the trade here. Sure, he may want to get short here, and he's got some, like it's going to come to here, and this is going to be his big trade. But you notice last week or something, he posted this thing. He lost all these trades. Like, why is he losing these trades? He's not willing to notice this simple doji and the simplicity of this doji and having a sell stop there. You got 2 hours to run. You got 3 hours where you could be running a trailing sell stop. Okay, with sell limits if you're bearish. And supposedly you're supposed to be bearish because it's going down. That's about trade management. It's about order placement. What he's doing is so crude that it's unbelievable that, of course, this is why, he's way better coached than he is a trader or an analyst of, what we know about these markets is that there are breakouts and there are fake outs. How do you know it's a fake out? You don't know, really, until it displays, but you cannot wait for confirmation. He's wasting all this time. You know how much time's passed? If you're not trading this, if you don't have a trade plan for this, or you trade only these kind of sell-offs, but you keep looking for a different currency pair that you see this. Anytime a currency is stalled out and it goes sideways, and it's kind of like people are like, well, I don't know. Okay, that's a doji, right? It's sideways action, and it ends unchanged. There's no decision made. Another doji forms. No decision made. Now, how long is this going to go on? Just like the question is, how long is this going to go on? This sell-off, if you notice, this sell-off is less violent than the last sell-off. I think anybody with half a brain can see that in 3 hours this thing went as far as it did in like 7 hours. It's losing momentum just from the sheer standpoint of that. You can overcomplicate this. You can break out a Gartley, a Batwing, a fly trap, a praying mantis. I'm telling you, you're going to want to kill yourself. So, it's wonderful that this guy has this kind of like, pick yourself up, dust yourself off, get back in, don't blow up your account. But he's not confronting the fact that, or he's accepted this bias idea of trend trading. But my question is that what do trend traders do when the market's not trending, which is 80% of the time? They're getting their ass kicked. Okay? They're being used as a rag doll by the spikes on the wicks. So what's the solution there? Well, the solution is to trade this wick. Make that wick your friend. Put in staggered sell scales, right? You take a 10K. So your normal 10K is spread over 10 micro lots, right? If you want to trade, you should be in a trade, at least a micro lot, on something. It can't be that difficult. And once you accept, another thing he's talking about is don't blow up your account. Well, listen, if there's $100 in that account, blow it the hell up. Who cares? It is some of the stuff this guy says is so proper for normal civilization. But if you're a trader and you are getting in on every retest down here for this scalp, and that's your whole life is just scalping like this psychosis here, you have sell limits and buy limits. As long as you did your risk reward ratios where the sell limit gets in on a limit here, the stops here, the take profits here. Here's your risk, here's your reward. The idea is to place multiple orders and not rely on some guy coming in your showroom and buying the $180,000 Mercedes and saying, I just made this great trade. No, you got to have some guy come in and buy the swag. He's going to buy a coffee cup, Mercedes coffee cup for $20. You get $10 commissions, right? That's a trade. It all adds up. Like every little trade adds up. So, the idea that you can trade any size as long as you're winning, right? And this is goes to the percentage thing. It's kind of ridiculous because what he said in this other video is that his risk to reward ratio is not built on. In other words, he said that some people would say, listen, I normally risk 20 pips, so since I'm risking 40 pips, I'll trade half the size. And that is the way to approach it. If you are truly going to be linear risk, but he's saying that he has a fixed risk based on his total portfolio. Well, that's kind of silly, because why don't you just open up another brokerage account, right? And supposedly these guys got all the time in the day because they got all the time to do all the, selling of this material and videotaping, but not really thinking about what are these markets really doing? What are they really about? And when a market moves like insane rate of change, I'm talking 100 pips in 15 minutes. Okay, some currency pairs, right? So I'm trading now 12 currency pairs, but across multiple accounts, because there's no way I'm going to swing trade on the same account I'm scalping on, because when I build a position on a plunge and I'm loading up on that, because that's the only fun part about trading, was when the market's on fire and you've got the tools to execute at that speed with kind of some fun, because when the market climaxes and you have your orders pre-placed at this crucial level, plus as you're getting filled and you see it happening, you can get in at the market and actually add to that position. So you're approaching it from the standpoint of, that thing's going to get hammered again. These markets do not, like, you can sit there and retest the zone 5 damn times. Now, if you look at the Euro Swiss, that's all that market is retest. I swear to God. Looking at that thing, but it's not moving a lot of pips, but it's a high probability trade. It looks like this stuff here all day long, just sideways, right? This totally, now you have to adjust your trading style to fit the market. That is one thing you do have to be submissive on. You need to, so all the guys that are the trend traders and the snipers and all that stuff, you just have to be aware of the fact that what that market does, it's like babysitting a child that's 10 years old, and basically he gets to do what he wants. You cannot, there's nothing you can do to control this kid. You just have to keep the weapons away from him, so all you can do is run defense, right? Trading's a defensive game. You cannot get out a gun and blow the kid's head off. You're not allowed to do that one, so you're kind of like just completely at the mercy of. Your only recourse is to not participate. You have to leave the room, which means you wouldn't trade, or you just, if you've got tactics and strategies to implement to kind of take advantage of this child, of course, you're not going to be able to manipulate them. Now, if you're a manipulative person, trading is going to be tough because you can't kind of make the market do what you want. But what you can do is you can set your own guidelines of how many pips you want to risk per trade, and you just put the damn trade on. I mean, you're not going to make a living trading by just waiting for really great setups with your Gartleys, because your chances of these patterns unfolding the way you think they're going to unfold is so far from what the normal boring chatter and what people call noise. Never forget, it's money. Noise is money. If you're on a 5-minute chart you would see a Gartley pattern. Right? You would see a bat wing. Not going to see it here on this 1 hour. Another thing is this guy is time frame matters. So what realistically does he think is going to happen in this? In other words, when this thing finally takes out either zone of the bigger picture, which would be like this is 12-hour. This is a 12-hour doji forming here, right, or something. Anyways, I'm totally getting tangential here. Let me go back to his interpretation of reality, which is always fascinating. I just love this guy to death. Just every time I watch him, I'm learning something about what not to do.
Looks like we had an advanced pattern here, which could have given you an aggressive way to enter right up here at 108.23.
Okay, so now this is very fascinating. The fact that he comes up with this based on that is just, I just love those. Well, I kind of like the old Batman from the 70s or 60s. But this here is got to be the most hysterical add-on to anything that's going on. And let's not forget that he has not mentioned, and he doesn't typically mention, the RSI. So from a strictly mechanical standpoint, if you were to just sit there when this thing's crashing down, yeah, you're putting buy stops on that, because if it comes back up, right? And where's the other place to enter on close is when a top becomes a bottom in RSI, which I can't stretch out his thing, but notice that this is closing price, so actually he should have a closing price chart. I mean, I love the candles to death because, usually that's what you would have, a candlelight dinner. And I can't see it there, but there's a head and shoulders here. So this would be the shoulder, the head, the shoulder, and RSI. If you draw a trend line above these two bottoms, notice that those double bottoms become resistance and plunge all but hell, when it gets below here, and this is, if you're Elliott wave trader, these are the wave 4 is this boring consolidation. So what you have right now is you finally kind of have a slight divergence going, but you're waiting for RSI to come back a little bit there. Right now, what is the trade right now? For me, it's certainly not going through this ridiculousness that's going to take another 8 hours to, and then it's got to go, what? What are you doing right now? Oh my God, I got buy limits down here. Just because, and I've got buy limits here. But now these things, so I got a whole new system here. I'm running 8 hours on these orders. So I go to sleep, wake up, right? Go to sleep, wake up with money in your account because you put up a sea of iceberg orders down here. And they picked you up and cha-ching, you're out, and maybe your targets are conservative, or maybe you're still going to ride that puppy. You're going to hold here. You're going to swing trade it till it does come up to his thing. So why isn't he long now? Because he's bearish. Okay. I guess, this is money management. If he makes a living at this, his money management's good because his trading, well, it's just, I could never do it. It wouldn't make sense. And actually, this thing could go like this. I mean, how many times have we seen a market do this? Right? Just go look back. As far as back testing, the only back testing you need to do is having a 20 pip stop, a 15, based on the currency you're trading. Of course, if you're trading some of these pairs, you need a 50 pip stop to make 100 pips, right? So let's face it, that's always going to be like, how many pips are you doing? And
so check your data. I missed the 50% by 2 pips.
Oh man, see now this is another thing, and I did a video about this recently where he missed a trade.
I missed it by 2 pips. I'm not going to force it to work.
He missed it by 4 pips, right? He's not going to force it to work. He's probably just a one bullet. Would you go, just for instance, say you were going to buy a firearm. Wouldn't you buy the 19 round Glock? Do you want to have like Old West 6-shooter revolver? You're like, damn, I'm out of bullets. No. this is what I just don't get about this guy. He seems so intelligent. How has he not sat? Okay, who hasn't sat in front of a chart and asked themselves the quintessential question? I did it. I did this 20 years ago on a corn chart. I looked at it and I said, how can I get in this thing? I know it's going up. How can I get in this thing with a stop? And how many, like, if I just trade one bullet, I'm like, damn, if I lose on this trade, and this is back when, it's crazy, right? How much margin you need to trade. I said, what am I going to do? I'm going to feel like I just got punched in the gut. Because I didn't have much money back then. So I just was like really scared. And I said, well, I don't think I can come back and do the trade again. I have to reanalyze my whole system. So apparently he's trading too big. I mean, he says don't trade too big, but he must be trading too big. Or he's too lazy to put on a smaller position and learn what the market's really giving you. It's giving you opportunities about every 3 hours. 1 hour chart, every 5 hours, I think. If you're strict, okay, every 5 hours, let me check the market. If the market's quiet, I'm putting in stops. I'll trade those breakouts. When the market's on fire, I'm so not going to trade a breakout. I'm probably going to put in a limit order really way out. Unless I'm willing to drill down on that 5-minute chart and be like, okay, there's the pullback. Get in at the market, boom. And maybe get in on a stop, boom. But if that train left the station and you're chasing it, if it backs up even 10 pips because you're trying to like cash in on this violent, it's like this violent move here, you're trying to cash in on this. Maybe on a 1-minute chart, 5-minute chart. If you were drilled down to the 5-minute, you could probably see for a moment inside of this, and that's an amazing move. I would say there's probably, since there's a hesitation here, maybe there's a triangle forming on the 5. You have a sell stop. You sell at the market, very tight. At this point, you've got to be running 20 to 10 to no more than 30 pip stops because, you're just going to take that last gust of wind out of this thing. A lot of these moves have 2 price pulses. Here was the pause here. So this little inverted hammer is kind of doji-ish. So we had a smash, hesitation, one more smash. Usually it's like this. In Forex, you'll see this all the time. Completely symmetrical, slight doji, bam, it completes the wave. And this might be 18 hours or it might be 3 hours, right? That's where the money's at. And if you wanted to be the seller, there's a doji here. So we know there's a triangle here. If you look right, you can see they wicked up into that. Yeah, if you're really bearish, you're selling every rally. You're not waiting for it to come to here, are you? Yeah, and you made money, see? You made money here. So it's all about picking this. How many pips are you willing to risk? Seriously, that's what it's about. I mean, this is how bad it is and how boring, how absolutely boring trading is. So I get the bat wings because it's cute and it's very intriguing, but I just don't think it works. And why did he choose to hang it off of this? Why wouldn't he choose to hang it off of this low and create a crab dish, right? Or whatever the latest flav is.
I thought I had it earlier. I'm not going to force it to work. What I mean by forcing it to work is going, oh, well, I really should have took it from here, this high, and now it works. And there's nothing wrong with taking it from that high, but the fact that this is the one that I measured first, that stuck out to me.
It stuck out to him. Didn't he ask himself at some point in his thinking pattern, like, that's the only reason I do these videos, is so I can think about my own stupid thinking, right? Who hasn't been so dumb as to even second guess not the trade, but their analysis. Like, who hasn't said, gee, why did I think that was a good idea? Okay, every step of the way, what happens is the more you trade, the more it becomes to the sake of, it's about fear. It's not about what that chart. Why would you break out your fib tool? Because you think it's going to give you the security blanket of science or something, right? Like you got out your meters and you said it's safe to go in here. It's safe to go in the cave because the oxygen levels are good, right? And trading's not like that. Trading's risky. So you basically have to have a samurai attitude where today's a good day to blow up my account. As soon as you let go of the fear of blowing up your account, and okay, he says you don't want to blow up your account because then you can't play the game. This is presupposing you have one trading account. If you really are going to trade, open at least 3 trading accounts. One's the scalping account, or one's the dollar CAD only. One's the euro, right? It's the only way to do it. Well, at least for me. And I think for anybody, like, okay, maybe you have one car. What if you had 3 cars? One car breaks down. You got your own loaner, right? You need to jump a car from the other car. So why would you want to have 3 cars instead of 1 car? You'd rather have 3 cheap cars than 1 high-end car. The reason is you'd rather have 3K, rather have a 10K spread over 3 orders than you would have a 10K raw in one position. Doesn't make any sense, right? Like who? So why is trading any different than those other parts of your life? And here's a guy who's responsible as hell. I'm going to guarantee you this guy is never going to steal from you. And he's honest as the day is long. But is it helping him make money in these markets? I don't think so. And another thing is that even the phrase advanced pattern, think about that. In other words, he's not just a pattern trader, but this is advanced stuff, people. Only for serious traders. And he said the people in the forums aren't serious traders. Well, if you're a swing trader and you have nothing else to do but go out and see what other traders are doing, and of course everybody's going to disagree only because some people are trading a 5-minute chart and they're looking for a certain move, and some people say I just went long the British pound, and they're like, is he kidding? It's going down. Well, maybe he's just going to trade the bounce, right? And the other guy's like, oh my God, really? I mean, I'm doing the same trade, right? Like, who isn't looking for this thing to retrace? And so what team are you rooting for? But what he's doing here is like, he's saying this is, he's only looking to be a seller in this market. And of course, I think that he's waiting for 12-hour setups, right? I'm just going to guess.
I never want to put myself in that position where I'm trying to force something to work. So I'll have to find another way to enter. But perfect example how you can combine.
Well, the way to enter, and he doesn't bring this up, is there's 3 ways to get in the market: stop, limit, and at the market. So if you get in at the market, what you're saying is, I think the market's going, if you're going to buy it, I think it's going up. If you don't think it's going up, then obviously you're scaling in because it's going to go down. Right after you buy it, it may go up a little bit, but it's probably going to go down some more, right? Because the market is statically choppy, even in a downtrend. If you sell at the wrong moment in a downtrend with too tight a stop, you're out. So what is the thing? That's why they say you need patience. But you don't need patience if you're trading a super small at the market to cure your ego of thinking you know where this thing's going, and then you come in with your limits. If those limits don't fill, and those are the limits that, in other words, if you're selling at the market, you're putting sell limits above after you place that very small market order to cure your ego, to cure the Gartleys in your brain, then Put your sell limits in with tight stops, and you're still looking for this kind of trade, which is, in other words, if he really thought this thing was going to go down more, maybe he sold here at the market, but he has sell limits up here. Now, he's missed out on a trade because of 4 pips, because he hung this thing up here instead of here or here. Why didn't I hang it here? And I don't want to force it. I'm like, you really can't see the forest for the trees. Like, you're in the middle of the forest, and you're wondering, like, well, you know, if you're looking at the twigs and you're looking at, he's looking at what's important to you when you're in the forest. I would say the 6 feet that's around you. So when you're in the market, what is important to you? Probably the next 3 hours. If you're getting your ass kicked in the next 3 hours, unless you had tight enough stop to get stopped out and go, that was crazy. And then you're going to it's not bad enough that you got stopped out and you're going, what happened? If you have to blame it on your batwing and your fibs and all the science that you bring to the table, and I get it, you know, science put men on the moon, but science is not going to save you in a game where this market can go plunging and zooming and plunging and zooming, and it's just, you are so going to end up calling the suicide hotline.
Advanced pattern completion with the overall, with trend continuation trading and sometimes even counter trend trading. We've been watching all week, and originally we were paying attention to this level right here, looking for it.
I accidentally paused the thing there. What he said was trend continuation, blah, blah, blah. No mechanic. He's not speak. In fact, you don't even see. Why doesn't this guy, I mean, is it really, do I have to sign up for the all-inclusive transformation? And this is another thing. Okay, I'm going to say straight out, I have gone to more seminars and symposiums where people say, oh, I got this great system. Even like Tony Robbins, right? Ultimate something, right? Now, if your self-esteem or your, I wouldn't say self-esteem, but your self-view is that, you know, you don't have the confidence, or you don't want to be under the spotlight. Say you don't want to, say you're talented and you don't want to become famous because you understand you live in a fishbowl, blah, blah, blah. Well, you're going to do everything psychologically to make sure, keep yourself hidden so that you feel secure, right? In other words, so why would a person weigh 300 pounds? Well, it may not be the fact that they have hormones. Maybe they don't want people to get too close to them. So they know if they get fat, that typically in the society you live in, people are going to avoid you, right? Unless you have a couple chubby chasers that are just humping you to death, right? But you typically don't see. So people do things that are not in their own best interest to keep themselves filling the safe zone. So who hasn't lost weight and then, or what do they call fall off the wagon, right? So you stop drinking, say I stopped drinking tequila, and then I'm like, I'm feeling so good. I need to take myself back to where, this is like nostalgia for an old feeling, and you take yourself back and you take yourself to the comfort zone. And this is kind of why, you know, people love Elvis Presley, because he went rags to riches. People love that story, right? So for some people, it is the contrast in life that makes it exciting. Like, okay, I just blew up an account, but look, I just made a bunch of money too. But that just matters of getting consistent. He does talk about being a consistent trader. But I think consistently accepting risk without any kind of emotional attachment.
Short opportunity. Now, price action eventually did come up to that area, and some of our traders had a chance to get short on a bearish bat pattern, but we didn't see the trend continuation move that we were expecting. Now,
well, if you got short here we go again. I don't get this. I mean, am I just like the dumbest guy in the world, I suppose? Okay, if you got short here and you wrote it down, didn't you just love that to death? Now, I guess this is the same currency. I don't know. But the sell, even the sell here, right? Not a bad trade. But notice this. He does not describe what's going on here. If this is a top, that became about, this is a big pivot, but what about this wick entry? Don't you want to have, as this thing's plunging and it's going down too fast to make sense, you've already established that we're starting to turn around here, and there's a, if you notice here, this is a positive reversal. RSI is more oversold here than it was here, but the price is higher. Right? Isn't that right? So if you notice, the closing price of this candle is down here, so that corresponds to this RSI point. Here is your positive reversal. I don't know why he just doesn't mention this, and why does he have it on the damn screen? I guess this bat wing is just so cool, dude. I mean, almost, but where's the head of this bat? Anyways, here's the other pullback, the other smash and grab entry. So if you're going to, and don't forget, he was bearish, right? Don't forget, I think this is the same currency. Tell me it is, please. It looks the same to me. Same kind of like plunge. We went down. It doesn't matter, but here's another assumption of his, is that I think his original idea here on this trade was going to be that it was going to go something like this. In his mind's eye, it was going to be like this. This is why the bat wings can really screw you up. Or even just anything, right? I mean, he's presupposing we're in downtrends, so when we come back to here, he's going to sell. Well, he was right? That was a good trade. But, my God, man, this is the big pivot. And this becomes a launching pad. But here, of course, everybody's selling here. For a ride back to here, possibly. Or just a ride back to here and then a continuation. But how do you get in? Do I get to stop, limit the market? Do I scale in? And he'll say stuff like, scaling is advanced. No, it's not. When you're a kid and you're 1 year old, right, you are like crawling around maybe, and then maybe you're 2 years old, you're walking. You scale into everything, whether you like it or not. So wouldn't that be the first learning step, is scaling in? Who jumps in? You traded a demo, and now you got to start with a mini lot or something because you got 20 grand in your account? That's ridiculous. If you can't turn $100 into $200 in a month, stop trading. You're not good at it. If you can't take 200 and turn it into 400 in a month, stop trading. You're never gonna. It's never going to pay. 5%? So you mean I got to get my day job going up where I got $3 million, I drop in the account, I'm living off of 5% of $3 million? Hell, I could park my money in some stupid annuity for that. I just don't, this guy kills me. But it's always entertaining, just endlessly.
Now, I'm still looking short despite the bearish or the bullish rotation that was caused by our...
So he's still looking short. This poor guy, they're beating the hell out of him. He's missed out on this trade, which is a structured trade for any bozo. Sure, it wicks out, but who couldn't see this internal top just like this internal bottom? Okay. That was the impedance. That was the congestion point failure here. But as you look at the role reversal, that becomes it's like when Michael Jackson was really popular, and then all of a sudden he wasn't. And then all of a sudden they loved him to death, of course, after he died. So the crowd is very fickle, and this is a serious breakout. Lots of money, comes back, retests, but gee, where's it backing off of? Why? That's a target. It's crazy, huh? Go figure. Well, supply-demand zone. Obviously dumb, right? But look at this. Now, I did this in a video a long time ago. Look how it doesn't want to spend any time in this range. Slice through, slice back, slice down, slice up. You don't see it congesting here. That's because, like from fair value to unfair, it may not come back here, but at some point it may congest down here. We may get one final congestion. At that point, pause. But you have to trade this hour by hour. It's like if you had a patient come in the hospital and this patient is completely not stable. Sometimes they're freaking out. Sometimes they're sleeping. There's no cycle to it. There's no rhythm. There's no rhyme. That's what these markets are like. There's just no continuity. You just have to choose your exposure time. Do you want an order down here for 8 hours or 12 hours or 1 hours? Do you want this thing to have like you can write a script that, and so what I'm going to do here next week is I'm going to have the 15-minute script and a half hour, 1 hour to take advantage of that plunge and retrace. But I've also got a pending sitting here. I have pendings, precision place, but who doesn't want to take that ride? Fake out plunge, obviously the trend's changed. Why doesn't he say in this video that when this trend line was taken out, and even when the shallower trend line, the less steep trend line was taken out, why doesn't he notice this painfully obvious situation? When this trend line here was taken out, right at this guy, it became support. Tops become bottoms on an angle when the velocity is so high. Even here, and this would be like a GAN fan, you're coming out to this last known top. It becomes a bottom. What can we expect here? Maybe it comes back and just retests this top before we really go roaring up. But the question is, are you short right now waiting for it to come down? Just waiting for that trade? Maybe that's all the pips you want to make. But to just break it down to this is, man, that's like, I don't even know, that's like a half a day of God knows what here. Anyways, this is I can't resist just analyzing this guy's kind of basic sophomoric approach.
A higher high, higher close. And if you checked my trading view charts earlier, I actually made a prediction of looking really our resistance level being broken, expecting a retest back into previous structure support now, and a move back up into our kill zone up here, where we had some Fibonacci confluence between, I think it was an 886 Fibonacci retracement.
Okay, so did he trade that?
Remember?
I mean, did he trade that? I don't get. Obviously, yeah. Did he trade that? I don't know.
I just deleted this about a few seconds ago. An 886 Fibonacci retracement. I believe there's a 1618 Fibonacci inversion.
Oh boy! Now, why is he wasting his time with this Fibonacci? This is to support his fantasy argument.
Bang! Right up there. Looking for a potential reversal in that area as well. You can see we have some RSI divergence as well. If you look at my RSI down here, putting in lower highs, and of course our price chart putting in higher highs. Now, again, didn't have a chance to.
I don't see divergence. I do see that positive reversal, and he calls it a. I don't know. He calls it the wrong thing. In my book of RSI, Andrew Cardwell, The Intellectual Error, Connie Brown, the one that wrote the second book, she calls it a positive reversal.
Get involved at this first move, and this is why we're patient. Just because we don't get it the first time doesn't mean we should scrap our analysis and throw it away. I will be looking for a chance to get short within the hour, at the top of the hour, which is in about 5 minutes. Now, probably won't be holding this too long. We do have non-farms coming out, but if I can get a short move, if we can get some type of move over the.
So nothing like just forcing that short. Why isn't he short right now? What the guy's killing me, man. You should have been short, at least on the breakout of that last doji. Like, you should have just been short because it came up here. And look how they trapped those bulls by about maybe 5 pips up here. Look how it broke out higher than, well, not quite to that wick, but you just cannot. I don't know, dude.
London session, maybe right back down here in the structure. I'll look to remove a portion of my profit, and who knows, we may leave one on for the non-farms. Of course,
who knows? I mean, this is the guy that plans everything out. That is quite a cavalier attitude, I must say. Not that, I mean, you have to have a cavalier attitude, but if you're just like, I don't know how this guy does it. Apparently he doesn't. I mean, get his ass kicked last week. Just like that guy on this sharp trading thing. He's like, yeah, don't see any effect from that interest rate hike. Yeah, right. Right, buddy. How do you like that sell-off in the stock indexes?
putting myself in a protective position.
Oh, and the Greg Marino guy, cute as hell. There's a bullish pattern. I mean, the idea that a pattern. Who hasn't looked at a piece of lint and thought, "Oh my God, it looks like a spider"? Just jump up on a chair and scream like a girl.
And what do I want to talk about? And managing it wisely during that non-farms report. So,
yeah, you're gonna manage dude. If you don't have a trade plan for news, don't even get involved. Like, you have to have all that stuff set up front. Your heart should not be pounding when the market's spiking up and down 300 pips. You should just be like, oh, I actually got a 75 pip stop to make 150 pips. Got the order right there. Boom.
We'll see. We'll make up my mind tomorrow once I see what price action actually did. Who knows? I could just get stopped out and blown out the water, and then I won't have that dilemma.
Well, there you go. And that's why we trade with stops, people. So you can be off the hook and go get drunk. But that's not enough for me. Not even. I want to know how to make money from getting, like, my whole thing is, and it's always been, okay, say you bought right here, and they just keep pounding this puppy, and then right here, you're getting killed. But what if you bought that? Because it happens so quickly. That only took a half hour for that wick, if that. And then you rode that puppy all the way back up. So I'm sure you could put a, look at this price pulse failure here. Big down, up, pause, boom. Start buying here. Buy. Take a little off the table. Buy. Total contrarian, right? Forget this downtrend garbage. It ain't going down forever. Look at all those pips. Forget the fib. Forget the bat wing. Just jump. You want to be cavalier? Yeah, totally. That's how you make money. You have to have some serious cojones.
But just wanted to keep you guys updated. Again, we've been doing this all week in the live room and posting it on TradingView as well. So it's only right that I keep you guys updated on what I'm about to do with this trade. Watch it. It's
the war room.
Interesting time when non-farms come out.
That's a great attitude.
We call it the fireworks show. So sit back. I've got my popcorn and my coffee ready. Wonderful combination, and we'll see what happens. And it's 8:30 now.
Okay, the war room. I mean, think about this. Can I get my brain around this war room thing? This is a psychological setup for failure for some people, not for all people. But if you're a warrior and you put on your black gi and you've got your yoga gear on and you're ready to go, got the incense burning and you're a warrior, man, that could be a perfect psychological setup to give you the motivation to kind of like muster through getting your ass kicked in these markets, getting stopped out, feeling like you just, got trapped in a trade, you just like, oh, this is good, I'm not gonna miss out, I'm gonna jump in, and then the backlash comes, right? I'm not even gonna let these guys talk, but just look what they're doing here. Like, you can kind of picture what's going on. Just think about that. Like, look at that, tell yourself, why there, why those triangles, why? And this is a 15-minute chart. On a 15-minute chart, don't you just have your finger on the trigger to drop limits or to buy at the market? Or to get in on stops if you're like, well, I got to go to the bathroom. Look at that 1-minute chart. I see a triangle, boom. Drop a script to buy on a stop for a predetermined 10 pip risk to make 20. And you're just getting in. You're in so many baby orders that all have ratios that are in your favor, anywhere from double your money to 4 times your money. And I think he's trading like, I don't know how many currency pairs here of that. What a disorganized, I mean, for me, that's the one thing. Everything's got to be gridded out. Everything's treated the same. I don't have any kind of, he's doing it like he's, doing artwork there. And maybe these guys are frustrated artists. I cannot figure psychologically. I'm just mystified on so many levels every time I tune in. But I mean, you know, it's the internet. People are allowed to, you know, I'm allowed to complain about this. I'm not complaining. I am complaining. I'm complaining because it's just ridiculous. Okay, let me see where this guy's at with this now.
Structure, and we're looking for a pullback back in this kill zone between our previous new structure low and our previous outside return. Now, we're far away from that. We may not even get up here. It looks like something came out and we're starting to see some action in the market. But what we can do this earlier in the week is project and just mentally prepare ourselves for what type of opportunity
look at this beautiful
could take
trap.
place. Now, I'm going to pause this video and give you a few seconds to try and predict to see if you can guess what I'm going to predict here on the chart. Here's a hint: if you were in the 12-week transformation private training this morning, you should be all over this.
That's the guppy. Now don't forget, this is the guppy. This thing's moving 250 pips a day, right?
And then we'll come back and look at it in a few seconds. We'll take 5.
Lord Almighty. Huh. But it's about position size and time frame in the end, you know. So you're definitely taking profits. If you sold here,
nothing like a
you got to get out here just structurally speaking.
But I couldn't stop. All right. So there's a few things I see on this chart as far as making a prediction for this potential reversal zone. Obviously, I'm aiming the type of trader I am, and I'm not a true trend following trader. We went over that this morning as well, but I'm aiming for a retest of our resistance level right here. There's a few things I can look at. I can look for the market to put in a harmonic move here.
Oh man, come on, dude. Are you kidding me?
Look for an equal measured move. You can see swing low to swing high.
Well,
we have a retracement, an outside return, or an extension, I should say. If we get an extension, you can see that
there's one flaw with
completion is going to put us right here
if you don't mind,
very top of the structure.
Hey,
if I want to, I can add some Fibonacci confluence to that as well.
He did that wrong. I do that. Okay, it's not like that. This guy's got DreamWorks in here. It's like this. Just so you know, if you're going to do that kind of analysis, you can't cross over this middle. That's advanced. No, it looks like this more like. What the market really does is it's top to top, right? This top, and then you're looking for the channel. It's a channel. Your channel doesn't look like this. The trade was this. Comes up. You have a pullback. Then you take the highest close within those two, because you don't know the future, and you project off of that. So it's always going to look like, how would you do this? I mean, in other words, your projection here is going to be like this now. Find the highest close within there. Okay, it's going to be like this. Right? I guess we're getting to the same point. But the problem is that the steepness of this, you're hanging it off of this because this is the channel. And of course, you have sell limits here. But why don't you get long for the ride? Huh. I'm never going to understand it. Well, I guess I have to understand it because, you know, we all see the market differently.
Taking my Fibonacci extension tool from swing low to swing high. You can see getting a 1414 extension in there. And it looks like we're going to get a 1618 inversion if I take that same tool and measure it.
But to what end?
Leg, boom, right on there. Winner, winner, chicken dinner. It's like he knew it would happen. So that's definitely a way we can start projecting that potential reversal zone. Also, for you guys that are familiar with advanced patterns, it looks like we may be setting up.
I think you just said it. I'm sure everybody's familiar with the old psychological projection. We don't see people for who they are. Like, say you are looking down the street and you see a gorgeous woman in gorgeous clothes. She may be a complete psycho, babe. You don't know. You cannot judge a book by its cover. You kind of can, but the exception proves the rule. Especially this pattern stuff. It's just dangerous. I think it's about the boring art of risk management, order placement, and diversification in order placement, and if you're going to trade more than one currency pair, once you go to the next currency pair and that thing's moving at 250 pips an hour, or the other one's only moving at 50 pips per hour, you need to make adjustments to that.
An advanced pattern here. Let me just double check. It'd be good if I had some ratios on this chart.
Oh boy.
All right.
Okay,
Let's
so
see if we
yeah.
match that.
This is psychological projection. So what he's doing now is he wants to see a beautiful woman, so he's projecting a beautiful woman on top of an ugly one. I think they call it beer goggles, but you know, it's just amazing how many projections can be made of future prices and scenarios. And I guess if you're trading a backup plan, which is what Bill Williams does, in other words, if he's wrong, he's like, uh-oh, this thing, my parachute will make more money because my stop is now my stop in reverse. Stop in reverse trading, which takes some serious mental flexibility. If you're not used to it, it's basically about saying, oh, I'm totally wrong. She is a psycho babe, but maybe I can make money from the situation because I know a good psychiatrist, and I'll get a kickback when I say, you got to help this girl.
Yeah, we could be setting up for a potential Gartley pattern as well on here, looking at X to A to B, B to C,
I'm freezing
CD
to death.
depletion right up here, right around that same structure level for you. So again, a few opportunities. I'm not going to get too detailed into it. Syndicate members, I will be back tonight after the New York close to show you guys a more detailed video. If you're not in the syndicate, guys, it's $1 to sign up.
Yeah, I can't wait. Just love this guy. I tell you, I'm freezing to death here in my ham shack. Don't ever build a ham shack. Just word to yourself, wait till the summertime. All right, man. So, yeah, this is my favorite chief currency strategist. I just love his charting. Anyways, I'm not going to bore you to death anymore, but let me just show you my interpolation of the for all the Gartley people that are still hanging in there. I've been doing a lot of work with the adding the Gann grid to the adding a Gann grid to the MetaTrader platform, which is not the default setting. So if you right mouse click on this customize on your tools for like your Fibonacci and all that nonsense, if you go down here to Gann grid, which used to be on this side of the equation here, you just have to hit highlight and insert. So if you wanted to do trend by angle, and what I did here is because now that I'm trading all these other currency pairs, I'm swing trading them primarily because I like that trade. It makes more money to get the reversal trade. Typically, the trend trade breakout involves a little bit of monitoring the market for volatility to find a quiet place to get in on a continuation. Whereas the limit order thing, if you put limits way outside of current price, it's based on a retracement theory that the market's just going to come back to the mean. And sure, you could put up all your stuff, but I found this Gann grid to be amazingly, well, it gave me, say, here is the euro to the yen. Now here's a crazy pair that I put out 250 pip. These big black guys are set at 250 pips. These little guys are set at 50 pips. So just to give you an idea how much this market can move on a, this is the 1 hour chart. So can this market move? And this is the question I had. Can this market move at 250 pips in one day? And it really, here is 250 pips in one day. If you consider the corner of this, the dotted line is the beginning of the day, and the bottom corner here is the end of the day at 250 pips down. Just set at that rate of change, not really doing it on the price there. But you can see near the end of the day, it was moving at a rate of almost 10 pips per hour. And 10 pips per hour is about 240 pips a day, right? Now, so I could buy, actually, I could put an order in that lasts, 8 hours, and it's 240 pips steep. So if I wanted to, or 1 day, right, I could put in buy limits that last all day long at 240 pips deep if I'm going to trade the bounce. Now, another thing is that, and I will never stop saying, forget about Fibonacci. It's all about pips. What's your tolerance for risk? Look at this thing, right? Come on. Is it just me? This is a 50 pip box, so at 50 pips per day, can this market drop? Not at this many pips per day, but how about this many pips per day? Not hard to do. Look at this 50 pip range. Now, if you're willing to put in stops that are 50 pips, you sell here, you got protection here. Okay, you're just at break even. Now you're up 100. Now you're up 150. Now you're up, up, up. If you're running a trailing stop 20 pips behind this for protection, they'll stop you out here. But this is the node I was talking about. The node in the market, which is the typical pattern, is to go. Delete this guy. Okay, unfortunately the market's closed, so to refresh my handles I have to do that. So here's the deal. Smash down, pause, smash down. But look at this 25 pip wick. I know it's 25 pips, so you can see my 50 pip box here, 50 pips per day. Look at that trade, back up into resistance. Sure, you could do what he's doing, which is, I have no doubt, and this is probably, I don't know, this is the euro to the yen. I can already see that he's got some kind of bat wing thing going here, and he's looking to get short when it comes back into structure, right? Into previous lows. Where the people bought here thinking it was going to come to here, and they're like, oh my God, I bought here, I'm finally back to break even, and that's why the market reverses there, because people are like, whew, missed that bullet. So maybe he got short here and rolled this down for 150 pips if he was able to withstand the 75 pip rally. But look at the 250 pip line. Well, I think what's more fascinating than Fibonacci is the 250 pip line, which actually, this is not a round number. It's like 12. This is like 127.50. But holy crap, right? If we take this out, we're obviously going to go slamming up to here. We're going to go up, right? How do we get on? Well, tonight the market's going to open. So what's the trade plan? And so I'm looking to buy the British pound because it's going to come back down again. But here, it's a no-brainer, right? You have orders sitting down here for, say, 8 hours to buy here. And it's going to take a profit to here with a 25 pip stop. That is the beginner no-brainer trade. Like when you break the pool balls and there's 5 balls near the pockets and you run the table, you run the table, right? Then it goes into this thing where, unless you're a good range trader and you're willing to sell, buy, sell, buy, sell this whole time, if you're trying to, you say it's a downtrend, I sell here, I ride it, they stop me out, I try to keep getting in this, they keep stopping me out. Look at this. Look at that trap. My God in heaven. You get in there, you're up 100 pips. That's a good trade. Risk 50 to make 100, double your money. Even have 35 pip stops to make 40. The whole array. And all you have to do is place the orders. Now, I wouldn't do it manually unless you really are not lazy. But if you have, which I posted the drop orders that you just drop and you put cells in here and they become cell limits here, so you have a big cluster of cells. This is your whole, like, what he calls a kill zone, more like an entry zone. My God in heaven, when you take this out, you don't want to get short here, because then your stop has to be 100 pips away. But man, you ride that puppy down, and if you look left on this, which let's see if I can zoom out. I guess I'm as zoomed out as you can get. If I go to the 4 hour, of course none of that's going to make sense to that chart, but here's your 250 pip. Look at this bounce off the 250. We plunge 100 pips below the 250. This is 250 pips. Of course, this is now a week. All this stuff in here and the holidays kind of screwed this chart up, but so yeah, who's not selling here on limits? But it's just order placement. You never hear this guy talk about order placement. But the thing that I did here was I went to the Gann grid and I said to myself, let me figure out how many pips a week I want to make. I want to make 100 pips a week. It's going to look like this. If these are 50 pip, if this is 50 pips, you set your Gann grid to how much rate of change. You pick the rate of change. You don't let the market pick that. Then you drag this around till you find a channel you can tolerate with a 100 pip stop to make 300 pips. Because if this is your channel that the market's dancing within, and you can drag it, this is why his Gartley thing in Fibonacci is ridiculous as this. What this is doing though, the purpose of this is risk per day or per week. Now if I set this to a 1 hour chart, take my Gann grid and set it to 50 pips per day, it looks like this. I got a picture. I got to find a day that's not chopped up by the holidays. So at a rate of change of 50 pips per day now, which one of these channels do you want to ride? With a shorter time stop, because and can I get a bunch of hits on these channels? Like, it's basically like channel mania. When you do a Gann grid, you're just saying, okay, give me every channel. Give me every channel on the whole lineup, on the whole cable system. Now look how it holds this at a rate of change of 50 pips per day. Kind of perfectly rides that. The idea here would be to cue the corner of the top of that ride. And you could also do right now the pip range is defined by the triangle here. If I make it the diamond, like if you're seeing this as diamonds instead of triangles, you need to take this tool down to the and now we got to zoom in, because now you're going into another level of and this is the 1 hour chart. Let's just start over. But if I set this Gann grid to the diamond being 50 pips per day, so if this is right now perfectly square at 50 pips a day, this corner here, you have to drag this till that corner crosses at the end of the day at 50 pips per day. Okay, it's a little hard to, you got to bring this dot, has to be in this corner. Then you have to scooch this till you hit that. So instead of using a Gartley and all that stuff, I'm picking the rate of change I'm willing to tolerate. And that angle of channel. So if you put it in the corner here, say this is your top climax moment there, and you know that this diamond, what I'm trying to say is, the whole reason I did that was to create this diamond to fit inside of this 50 pip thing. So when you see it plunge down here, and this is why he's trading this Gartley stuff, because it's about angles. If you notice, these bats are like triangles and stuff. It's all about the angles. So if you drag this over so you get confluence here, look how this market comes into these right to that rate of change, right? This top of this channel, and there's nothing magic about 50 pips. I could have chosen a different thing and I could still get hits on this. And that's why Fibonacci works from the standpoint it keeps you from over trading. If you're waiting for the market, okay, you know this exists. So if you queued this to here, and you know this bottom exists, you queued the Gann grid to that, and it coincides with this. Look at this perfect touch, which is 100 pip. So from here to here, this diamond is a 50 pip diamond. I call it Diamond Trader. Go to my website, diamondtrader.com. I'm just kidding. It probably hasn't been, the domain's probably open, so you can always buy that domain and then try to sell it back to me. But also, just in terms of price over time, which some guy posted, oh, you can't time the market. You don't have a choice. You have to time these markets, or at least the market's doing it for you. When it closed here and created this inverted hammer doji guy, if you look right at the 250 handle, comes right back into the Gann grid, right? If I took the Gann grid down to a 25 pip risk, that may be a little bit hard to tolerate all the lines, but for some people, they don't want to risk more than 25 pips. So that would basically, you have to drag this so the diamond is now set at 25 pips, and you're looking at two diamonds is going to give you. So I'm still not there. It's a diamond and a triangle. So you need to have 4 boxes per 50 pips. And this is when you would be slicing it thin, but you don't have to go to the 5-minute chart. The cool thing is that you can really build the... okay, so we're looking for 4 boxes, which would be looking for 2 diamonds in a 50 pip. That's not perfectly up there, but this is the diamond, right? This is 50 pips, so you have 2 diamonds inside the 50, this box. You're still getting this confluence here, but now you could run tighter stops, so maybe you have and it's really about how many orders you're getting in. And here, now you're getting hits because I'm choosing a 25 pip grid. I'm getting perfect turnarounds at the top of the hour on that Gann grid. I also have a nice narrow channel here where it just keeps banging up on that channel. So if you're counter trend scalping this thing, sell, boom, pull back, sell, boom, pull back. But keep in mind, this goes on for 2 days of this beautiful channel, and then whoosh, God almighty. Here's where you have orders 150 pips deep all day long. You gotta go to your day job. You're willing to buy a 50 pip window here for a 50 pip retrace, then they crush you again. But you have to have your next day, you're doing the same approach, which is, in the end, it would be buy low, sell high, because you can't make any money buying here and riding it to here when they crush you into the ground and leave you all shriveled up. So that is the thing, and the Gann grid is totally fascinating from a standpoint of using it as a risk tool. Now, without looking back, you can plan out the week ahead, which is kind of neat, because we can all see. You cue it just to here. So all we know is this last channel. But this is the breadth of the market. Can it come smashing back? Oh, yeah. So the vector point, now on his Gartley thing, I'm assuming he's going to place his orders at a certain vector or a certain intersection of his fib with his blah, blah, blah. But if you're going to do that, why don't you just whip out the Gann grid, because at least this is linear risk. It's always the same. There's no bizarre extension thing. You can also put in any time frame. So if you went to the, if I kept this at 25 pips, no, nice thing is you set that to 25 pips. Now I go to the 15-minute chart. I'm looking for a setup on the 15. Let's see if I can rescue the grid. So you're just really worried about this, right? You're not. And on the 15, look at these stabs into the 250. This is if you're only trying to make 50 pips, all you care about, and this would have nothing to do with trend or anything. It's just about getting in here and getting out here. You're getting in, as it's plunging, you're just buying, and then you're just taking off. But this is like incredible. This is, there's a lot of pips in there. And then finally, of course, for the guy that thinks you're in some kind of trend, He finally makes his 100 pips because it goes slamming up into that hyperspace place. So he finally makes his money because it went up 50, 100 pips. But same could be said for the guy that had a sell limit right there at that trap and wrote it for 50 and 100. He made money. All right? Okay, and then you buy back, you make money. So you really have to be, if you really want to be just building your account, and of course when it gets quiet, goes sideways, yeah, that's a pattern. But how do you play it? Do you put a buy stop here? Do you buy at the market with a stop here? You can run a lot tighter stops when the market's quiet. Like here's a nice quiet. It's about 2 hours of just nothing. It becomes a great place to put a buy limit for a scalp later, though. At least for a ricochet. Not a lot of pips, maybe 20 pips, 30 pips. So what's next here? Coming in next week, if you really wanted to plan ahead like this guy's doing on his Gartleys, which he's out 12 hours in front of the market. But imagine you were just trading these last 2 days. What would it look like? If you were using this Gann grid, it's set at 25 pips per. Now notice the angle changed because I didn't fix the grid here. So if you fix the grid, fix the scale, and it says scale there because you really want to scale in and out of these markets. Look at this drama here on just the euro to the yen. Can you make money here? And this is 50 pips. And look at some of these psycho moves. This is a 15-minute chart. So maybe you're going to take your grid and you're going to tighten it down even tighter. You only want to risk like, I don't even know what this is, but as long as this center point, this would be the pitchfork, and this pitchfork, it's set at 50 per day. Of course, I've sliced it into maybe quadrants of 10 pips or something. I don't know. It gets kind of squirrely to adjust it when you're this zoomed in. But as long as that center pitchfork intersects at the end of the day, or just slices through there, I'm not going to get that corner to line up, but right there. So you know that's the rate of change, the angle, the angle, right? And then if you want to trade at 45 degrees, which everybody loves making money on a 45-degree angle, it looks like this, and it's a serious mess. Now we have to zoom in now, because now that I have the scale fixed, I can create the 45-degree angle. And you might want to have another monitor running to see the global picture, but isn't it amazing that with a pretty tight range on these diamonds, but look how it holds that median point, and that becomes the confluence pivot point where it turns every 15 minutes, and this would be if you were just like seriously scalper guy, just like boom, you're buying this thing, you're like, I'm in, I'm out, I'm in, I'm out, and then when it goes on this big hunt down here, every time you pull the trigger, whether you put a buy stop above that 15 or you bought this psycho retest that you just knew was coming and you had the plunge orders in there, and when it gets to here, you're taking something off the table, but look how it comes back to this. This is why people put up these Gartleys and they go, look, it works. Yeah, if I brought this grid down to the 5-minute chart and I put a plethora of these guys up here, you'd be like, oh, look, that's amazing. But you're picking the rate of change, because this rate of change here, look at this psycho steep rate of change. And this is another reason, is that if this is how much money you want to make on a trade per 15 minutes, you're picking how much money you want to make in 15 minutes, really. With this Gann grid, you're saying, if it's going to be like this, the diamond, the risk ratio, or the risk window, is going to be set to, that's really flipping out that grid there, but in other words, the rate of change here, look at this run up here. So if you took that as your, how much, you don't want to be in the market that long, so you decided that your channel is going to be very steep because you don't have any patience. Okay, I did this before on the 1 hour or so. To set the Gann grid for a 1 hour rate of change is Right now, the Gann grid's completely vertical on the 1 hour. And if you move it over 1 notch, that is 1 hour passing of time. So notice this sell-off here that took all of like 4 hours. Look at the rate of change on this channel. Bam, down hard. And look at the channel walking up. So this rate of change here is totally possible in this market. If you look back in history here, this is like kind of back testing with your channel. If you hang your channel off of this, and I don't know what the rate of change is here, I think it's probably about 100, 300 pips a day. This is the velocity that you like to trade at, and it really is about, some people are just petrified by the, or just astonished by the spastic volatility that can occur in these things. That's your rate of change, that's 1 hour. I zoom out 1 notch. I'm still holding this, it looks to me like 300 pips a day, right? Did this not drop down? Of course, this channel, it's even dropping faster than the rate of that channel. So if I keep this, that's a 1 hour, like I make it like this. I want to risk 50 pip diamonds. Okay, gotta wait for Gann to catch up. Problem with Gann, another thing, don't forget Gann is going to freak out. It's doing a lot of math there, and if it gets like that, you almost can't manipulate it. Okay, here's the rule of thumb. Go to the 1 hour chart, put your Gann thing on, drag over, then go straight down and figure out how much you can risk. You have to stretch it out like this. Okay, you want to risk, say, how many pips? So you have to find the amount of pips you're at. And here the diamond is set to, it keeps crashing. You can't be that zoomed out. If you put up this Gann tool, I don't know if this is the latest version of MetaTrader, but here's the thing. When it's like this, that is 0 time. One move over is 1 hour. How many pips per hour? Take it over here. Now, I have to switch the price grid on to see if I can set that to 50 pips per diamond. Okay. So that's a 150 pip diamond right there. If you're looking at this, I'm saying from here to here, this diamond here is 150 pips. So if you see here, the market dropped at 150 pips per that 1 hour, but it spiked back up. It's actually complete backlash, and this is why people get killed trading, because, this does happen at that rate, but look at that thing. Are you kidding me? That thing is just seriously steep. Right there. Bam. So that's the, and then if you make this 45 degrees, you can see how in the landscape of things that can happen in these markets, at 45 degrees, it looks pretty boring. There's an occasional wild move like that. But if that's your trade, right? You're looking to make that quick money. So if you go here on the, if you drag it to here, look at past behavior, and go down here, and this, I'm just using this as a rate of change tool, really. And so it's too steep. That rarely happens. But it happened up and down here. This thing ripped up and down at that rate. Hard to believe. Amazing. It's just insane. Here, if you had a 4 hour grid, that's the 4 hour price chart. You're going to move that over so it just moves over one, from vertical to 1 bar over. So this is 4 hours, and the diamond is set to 150 pips. If you go like this, so this is a 150 pip diamond, and yeah, it's moving down right down that median line at that rate of change. So a more realistic view for a swing trader would be something like this. I'm going to get way out. 150 pip per 4 hours. Here it's happening. Here it's happening at that rate. Actually faster than that rate. So, or no, it's about slower than that rate. So every 8 hours it's moving about 150 pips down here, right down this channel. That crosses over eventually and goes up another channel. But anyways, I guess that's it's just a fun tool. You throw it on anything. Here, you just whip it up here. And this, another reason why I like this is because there's no bias to it. It has an equal opportunity for up and down channels. So if you're looking for a channel to trade, it shows you not only the up channels, the things you walk down, it shows you the channel you could walk up. It's unbiased, kind of an unbiased pattern setup. And if you're looking to make 250 pips per week, you can come right here, set it to the corner at 250 pips per week, slice it so the diamond is 150. It's 1.5 diamonds. It's a triangle and a diamond, or you go for 2 triangles, 250 pips per that diamond quadrant. And that's the weekly, so a little miscued there, but it gets squirrely when you're zoomed in this far. But that's your average, and this is the rate of change you're looking for this thing to move at. If you're a channel trader, and you're looking at, this is the top line of resistance, and you've picked that rate of change. It keeps touching this channel, finally breaks out, finds support. This is the pound Swiss. It's all the same. Keep retesting the bottom of this. This is the middle of the pitchfork. So depending how you size that Gann grid, and you can print this out. It's probably better to just do a pure line chart, forget the wicks, print it out, and just figure, okay, and have that piece of paper in front of you so when you look up at your screen, you never, like if your computer crashes, you want to have this hard copy in front of you. I think that you can just scribble on, make a few copies of it, speculate with your hands, then come to the market and place the orders, because if you do everything on the screen like these people are doing with these pretty bat wings and crab heads, you're going to end up being so digital that you're going to lose the tangible aspect of trading. Like, people used to actually just call, there are people that would call the broker, get a quote, write it down on a piece of paper, get their own graph paper out and plot their own thing. And I'm hoping I can scan in some of my I have this system I'm building that's based on 8-hour pendings in a 45-degree angle based on Gann grid entries. So basically is going to lay, if I think the market's coming unwrapped and it's doing a plunge like this, I have buy limit grids that are going to come in. But I had to do that on paper on a graph grid, because if you can't run, you can run 8-hour scripts, you can run 6-hour scripts, you can run 4, you can run 3, 2, 1. If you had a 1-hour script and it was a buy limit for a plunge of 150 pips, it would not have filled because this took 12 hours to plunge. But if you had a daily sitting down here, you had a bank of scalps or swing retraces in here, you would have made something on that. Just because it went insanely unfair, 100 pip window. Of course, some of these things trades crazy, like the guppy trades in immense swings. So those trades look really, scary with they're ridiculous with a 20 pip stop. They're probably going to crush you out unless you, so that's why you would want to pepper this thing with multiple scaled-in entries at different prices always, regardless. And if you're sitting here babysitting the market when it's going through these spastic moves, then you are, but see, this is the thing. This is what's crushing people. They buy that. What about these wicks? It comes back and retests this. you kind of figure that's going to happen. So what's the trade coming next week? Oh, buy here. Obviously, this is the last known fair value range thing for a move to here. Or you have buy stops here, which is kind of scary to put buy stops there. I'd wait, at least tighten up your buy stop on the 4-hour bar. So mechanical trading wins. You have the trailing buy stops. You're looking for a move here. Or you sold here, and you're looking to come back to here is going to be your cash out point. I think that's, going to be, that's the logical place to get out. But the last thing I would want to do, it's bad enough if you got this scan grid up because I guess it's what importance you put on it. But if you're using it for channel walk-ups and walk-downs, the market's going up and down a channel, at least it keeps you aware of the fact that, hey, this is, from here to here is 250 pips. If you sold here and you got out here, you look like a genius. But could you psychologically handle being 100 pips from your target and witnessing a 200 pip move against you? That's always going to be the question. How much punishment can you take? And better to spread out the punishment in a bunch of bitch slaps than to get punched in the face with a boat oar because you put on a big hairy position just because you're guardly lined up to the 5th planet from the sun or whatever it is, right? Anyways, that's my view of the Gann grid is a tool of unbiased channel thing, and my review of another amazing trading coach that has more patience than I will ever have for his setups to form.